TheoTrade. This is Don Kaufman. It's April 19th, 2023. We're just about an hour after the cash close here on this Wednesday afternoon with the S&Ps once again massively unchanged. I look at this and I just keep thinking to myself, are these markets a little bit too quiet? And I'm going to try to dig into that to some degree and give you some ideas, some trade ideas, that I'm putting on right now. Because, with all due respect, we're still trading like a 16, 17 VIX. I mean, that's still relatively high. And I cannot help but think it's too quiet right now. It's too quiet. Let me show you exactly what I mean. First and foremost, the S&Ps today are closing in and around the 4173. What you're looking at right now on your screen, in fact, I'm even going to box this in a little bit here as well. Here you go. It's a 30-day 1 hour, and the entire marketplace, literally, since the beginning of April, is in what? You can amount it to, it's less than a 100-point range. I mean, every single move. I'm not talking about anything but absolute high to absolute low. Okay. And I can actually, there we go, right back to the beginning of April. Like you're 19 days into April. Obviously, that's not necessarily trading days. You're like 19 days into April, and what do you got? You got absolutely nothing. And I'm zooming into it because I'm showing you like literally the absolute low in here has been about 4,100, and the absolute high, you can see it. We missed the 4,200. Everything that's actually transpiring, all the news drops and the obviously the CPI and the PPI, and it just goes on and on and on. And, the Fed and the Fed minutes and the ECB and the ECB minutes, oh my. And what do we got? We got absolutely nothing to show for it. And this is where, again, a lot of people are like, well, the zero-day expiration is dampening down volatility. People, I do not buy it. Not for a second, okay? This marketplace, it's hostile. But you have a lot of traders that are tired. You got a marketplace that's tired. Let's dig into a couple of aspects. When I say it's too quiet, well, I mean it. I mean the entire trading day today. In terms of overall volume inside of the S&Ps, take a look. We did like 1.2 million contracts. It's light and fluffy, right? There's definitely a lack of contract size. You would think that we were like in like the middle of August kind of trade, but we're not. We're in April, and this is when you start to think about seasonality, and they go, sell in May and go away. I put all of that aside right now. I'm just telling you, this summer, okay, this summer is going to be volatile, and I keep reminding people of that because it is. And, a couple of, like 10 days ago, I did a little session. It was called the calm before the storm. It is the calm before the storm. And I think that you have to start to position yourself. That's not necessarily, by the way, a bearish connotation that I'm trying to make over here. So let's dig into a couple of underlyings. Obviously, the talk of the trading community right now. Start with Netflix. So Netflix, okay, big boy move? Absolutely not. This thing was expecting a $30 move on its earnings. Okay, the end of today, what do we got here? We got nothing. This is like a $10 move. I mean, literally, if you look at Netflix, some wild moves in the after hours here. So you actually had Mr. Toad's Wild Ride. Netflix, okay, got absolutely annihilated here in the after hours, only to bounce all the way back up, finish mildly lower in the day. $10, just good for about 3%. Right? All right, push that one aside because I know what you're thinking. No, it's Tesla. Oh, it looks like a huge move, except it's not. So Tesla today closed at about 180 and change. Presently, after hours, earnings are out. Doesn't matter what they are. Okay, they were in line with expectations. Yada yada yada. I could care less at this point. Tesla is now down about $5-6 in the after hours, and it's fluctuating a little bit because. As I'm speaking, I think Elon Musk is speaking as well. But with Tesla, you realize it's expecting like a $14 move. And this is where I say it's quiet. It's too quiet. It's expecting a $14 move. Actual move, $5, like doesn't resonate with me. It just doesn't. I think it leaves like too much volatility and risk on the table. And that's it's where all the zero-day expiration people come out and they're like, yeah, this is us, man. We're dampening down volatility. Yeah, until you get completely and totally annihilated in those trades. I want to remind each and every one of you before I go any further and actually describe some of the trades that I'm doing right now. that when you look at the S&P on the year, let's do it. Let's cruise over to the spiders. We won't use the SPX, we'll use the spiders. You look at the spiders, right? And you cruise over to year to date, and they're up almost 9% year to date. That's the spiders. Do you realize that 90%, that's right, people, 90% of that gain of basically 9% has come from a handful of underlyings. What are the underlyings? Okay, one of them which is Google. The next one on the list, of course, is Meta. Okay, what else you got? Oh yeah, we do have Microsoft on there. Okay, we have Nvidia, and last but definitely not least, okay, our friend and yours, Tesla. 1, 2, 3, 4, 5. You have 5 underlyings that are responsible for 90% of the gain inside of the S&P 500 on a year-to-date basis. And that's where I say, all right, that coupled with the fact that it feels like volatility is almost being like suppressed, okay? They've put a wet blanket over a really good volatility party right now. It's not going to hold this way. In fact, talk about how dampened down volatility happens to be. Look, if you will, look at the last 3 weeks of trade. And again, I'm kind of just zooming in to this last 3 weeks. One of the things that's astounding on this particular front is we can look back at a lot of data in the SPX. And what you're looking at with these 3 lines, this is the expected move. So for example, this is only a 4-day trading week that I'm highlighting right now that had about a $60 expected move. This last week, okay, had closer to a $75 expected move. This week, okay, we've done nothing. Where are we at this week? We have about a $57 expected move. Now think about this. We have not hit, and again, the key here is we have not hit the upper or lower edge of the expected move in 3 consecutive weeks, okay? And you look at that, you're like, that's like statistically, it's totally improbable. It's not impossible. I don't like the word impossible. It's totally improbable because I can actually go back. In fact, over 3 years of data, I mean, look at this. We can actually cruise back. I've been hand drawing these expected moves for a long time. But we can actually go back in terms of time frame, all right, and zoom out, 5 years plus. Here, let's go to 5 years. And I can show you, I have data from 5 years in here. And as you actually zoom in and look through it, okay, almost every single week, and you'll find a few right here, like right there, we didn't hit the edge of the expected move, and this one didn't hit, and this one didn't hit. That's 2 consecutive weeks, but the 3rd week got crushed, okay? You are not going to find any other data, okay, that has more than 2 consecutive weeks of not hitting edges of expected moves, okay? There is nothing that I have in any of my data sets that shows 3 consecutive weeks. And there's some mellow weeks in here, like, but this one tagged, and then it tagged here, and then it didn't here, right? Okay, but you will not find 3 consecutive weeks that didn't hit the edge of the expected move. And I wanted to go into that. And the reason I wanted to go into that is you realize, all right, it's Wednesday. It's Wednesday. We've already gotten through the majority of the week, and let's get ready to rumble because we're basically going to head to 4,200, okay? Or 4,080 on the of course the SPX and into Thursday or Friday. There's huge moves actually being implied here to the remainder of the week because again, it's totally improbable, not impossible, but it's improbable that we don't hit this upper and or lower edge of the expected move. As such, well, no harm, no foul. One of the trades that I'm actually doing right now is in VIX. Okay, so VIX is low, and you look at VIX, it hit 16. The kind of trade I'm doing right now is actually called the VIX volatility spread. What a VIX volatility spread does, I go out and I actually sell a put spread to finance a call spread. And to actually clarify this, okay, the trade, this entire trade is done for about a 5-cent credit. Now, does the trade have risk? It does have risk. If the VIX were to collapse under the level of 14, I could lose as much as $400 in the trade. But if the VIX starts to soar, if it gets above 26, I'm gold, Jerry, I'm gold, because I actually purchased a $6 wide spread. What's the most the trade can make? The trade can make as much as about $600. What can I lose? $400, okay? But what's the probability that we're actually below a 14 VIX? It's low, people. You haven't seen a 14 VIX in so long. I can't even remember, right? And with everything that's going to be coming this summer, this trade's done intentionally. Look, I'm out 62 days. Wanted to make it, steep enough to be like, yeah, let's, get it on. But if you actually bring up the trade and to construct this little beast over here, let's go ahead and construct the beast and see if it's even more of a credit right now. Look at this, 6-cent credit. I was able to execute it for about a 5-cent credit, but this is the kind of trade I'm doing. It's a VIX volatility spread. It's really effective. So what if volatility doesn't go soaring? Come on, I got 62 days for the world to fall apart. And I'll tell you, in a market like this, just get a little bit more strategic, okay? You got nothing but time, nothing but time. This volatility, in my opinion, yeah, the market is definitely too quiet, scary quiet, and scary quiet in a time frame that's not the summer, hands and feet inside of the vehicle. If I were you, I would keep my helmet on. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.